Wall Street's main indexes closed lower on Tuesday after First Republic Bank reported a dramatic drop in deposits, sending its stock spiraling and reigniting fears about the health of the banking sector. The Dow shed 1%, the S&P 500 dropped more than 1.5%, and the Nasdaq plunged 2%. Shares of First Republic nosedived nearly 50% to close at their lowest level ever after the struggling regional bank reported a more than $100 billion plunge in deposits in the quarter in the aftermath of the biggest crisis to hit the banking sector since 2008. First Republic said a day earlier that it was pursuing strategic options to quickly strengthen the bank without providing details. In other earnings news, shares of freight bellwether UPS tumbled after the company forecast full-year revenue at the lower end of its earlier outlook as it navigates a weakening economy. Also of concern was Tuesday's data showing U.S. consumer confidence fell to a 9-month low in April. Traders are keeping an eye on the Federal Reserve, which is expected to hike rates by 25 basis points after its meeting next week. Sean O'Hara, president of Pacer ETF's distributors, says recent market volatility has been led by those who think the Fed will then pivot and start lowering rates. But he's not a believer.
And I don't think that they're going to do that. I think it's sort of somewhat foolish to think that they'll raise another 25 in May and then, if the stock market gets a little squishier or softer or earnings start to slow down, that they'll start to cut rates this year. I just don't see that happening. I think they're going to hold rates steady for as long as they need to hold them in order to get inflation under control.
Meanwhile, in a big week for tech earnings, Google parent Alphabet said late Tuesday it would buy back $70 billion in stock and posted first-quarter revenue above estimates as demand rose for cloud services and ad sales held up better than expected. Investors cheered the buyback plan, sending shares of Alphabet up about 4% in extended trading.